Yes. And I would want us to pick from where we left. I would want to get somebody who is able to remember the concept of valuation, the concept of valuing an ordinary share. How do we value an ordinary share? Who is able to remember that formula? Valuation of an ordinary share. How do we value an ordinary share? How do we value an ordinary share? How do you value an ordinary share? By the way, are you able to hear me? Are you able to hear me? Hello, are you able to hear me? Hello? Ah, great, great, great. Now, ladies and gentlemen, if you remember very well, we said for us to be able to value an ordinary share, what we call the PO, provincial officer, should be equal to district officer into 1 plus growth rate all over Kenya minus what year? Government. All over Kenya minus government. Quite an important formula for us. Very important formula for us. PO equals DO into 1 plus G all over cost of equity minus the growth rate, Now, ladies and gentlemen, in some cases, you could get a situation where an examiner tells you to value, for example, a business, using, for example, earnings yield, method. Please write this after you've written today's date. Mention there valuation of a business using earnings yield method. Valuation of a business using earnings yield method. Valuation of a business using earnings yield method. Now, for us to be able to understand what Mwalimu is talking about today, I would want us to look at a past paper question so that we can be able to understand what this earnings yield stands for. So, and the past paper question that I would want us to do is November 2017, question number 5B. 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 Question number 5B. So we are told there that Deye Limited has provided the following financial results. Year 2014 to 2017, then we have profit after taxation. They have given us profit after taxation. Profit after taxation is like our earnings. Profit after taxation is our earnings. So they have given us there, the firm's earnings yield is 12%. The firm's earnings yield is 12%. So required, they want us to give them the value of the firm based on the present value of the expected earnings approach. Based on expected based on expected earnings approach. So I would want you to try connecting this particular question with this formula that we have here for you to be able to give us, ladies and gentlemen, an answer. Valuation of a business using earnings yield method, using earnings yield method, using earnings yield method. So try to connect, try to connect, try to connect, try to connect whatever that I've taught you with this. Ladies and gentlemen, this is quite a simple thing for us to be able to value a business or even a share on the basis of earnings yield. What I will think about, first of all, is the formula. How do we get earnings yield? How do we get earnings yield? Remember, for us to get earnings yield, anything that is yield-based, anything that is yield-based has got always market price per share in the denominator. So when we talk of earnings yield will be equal to earnings per share all over market price per share, all over market price per share. Earnings yield equals EPS all over MPS. Anything that has got yield, anything that has got yield, ladies and gentlemen, has got MPS in the denominator. Don't write this just for our eyes only. If they want us to give them dividends yield, if they want us to give them, for instance, dividends yield, who can try guessing the formula of dividends yield? Could you kindly try guessing the formula of dividends yield? Just try guessing the formula of dividends yield. Just guess. Dividends yield equals what here, somebody? Thank you very much, Cynthia. Cynthia, she has known a secret here, that for us to be able to get dividend, anything that is yield-based, anything that is yield-based must be having market price per share, because they're talking of dividends yield, the dividends goes up. So we'll talk of dividends per what here, somebody? Dividends per share. But we said we should not write this. And if you have written it, please go ahead and cancel it, because here, the valuation being asked in this question is, ladies and gentlemen, evaluation that is what here? Using earnings yield, using earnings yield, using earnings yield, using earnings yield. So they want us to do a value. Ladies and gentlemen, for us to be able to value this particular business using earnings yield, naomba usikize vizuri, earnings yield. So earnings yield in form of totality, in form of totality, earnings yield in form of totality, sorry, earnings yield in form of totality, in form of totality, earnings yield will be equal to total earnings all over market value. So when you are looking at it from the perspective of what here? Total number of shares. So if you take this and multiply this by number of shares, you'll end up getting total earnings. If you multiply this in number of shares, you'll end up getting market what here? Market value. You'll end up getting market value. Now, you see what this examiner wants us to do. Please, if you read that question very well, this November, if you read this November question very well, the November 2017, question number 5B, they want us to give them value of the farm. Value of the farm. So could you kindly make market value of the farm the subject? Make market value the subject. Make market value the subject of the formula. The subject of the formula. So if you do that, ladies and gentlemen, if you cross multiply, ladies and gentlemen, at the end of the day, you will come and get market value. Market value equals market value. We're making this market value of the subject, the subject of the formula. It will be market value equals total earnings all over earnings yield, all over earnings yield, like that. Which question, Sumaya? She wants to know the question. It's November. This question is November 2017, question number 5B. November 2017, question number 5B. Market value equals total earnings all over earnings who? Earnings yield. So it's November 2017, question number 5B. November 2017, question number 5B. Question number 5B. Question number 5B. Question number 5B. Now listen and listen to me very well. Listen and listen to me very well. I've been able to make the market value the subject of the formula. But when I look at that question very well, I can see my earnings increasing. My earnings are doing what here? They are increasing. I can see my earnings increasing. You see, earnings are the same as profit after who? After taxation. Earnings are the same as profit after taxation. You can see the earnings of 2014 was 6.0. And then when we look at earnings of 2017, they are 6.3. So I can see my earnings are growing, and that is why, because of growth rate, listen and listen to me very well, because we happen to be having a growth rate, because we happen to be having a growth rate, our market value using this approach will be equal to total earnings. We can call these total earnings at time zero. At time zero, the current. Total earnings at time zero, of which will come and multiply this with 1 plus what? 1 plus G. All over our earnings yield, but now minus what here, somebody? Minus growth rate. Earnings yield minus growth rate. Ladies and gentlemen, listen and listen to me very well. Listen and listen to me very well. There is nobody who would want you to even try to derive these. Nobody. Nobody would want you to derive these. Nobody would want you to derive these. What these people would expect of us, ladies and gentlemen, whenever they talk of valuation, whenever they talk of valuing an organization, what they would expect us to do, ladies and gentlemen, is to remember the mother of valuation models. The mother of valuation models is this one here that talks of provincial officer. Provincial officer equals district officer into 1 plus growth rate all over cost of equity minus what here, somebody? Minus growth rate. So when I read any question that has got valuation in it, always remember the mother of all valuation equations. Provincial officer, that is current market price per share equals current dividends into 1 plus growth rate all over what here, somebody? KE minus who? Minus G. What do I mean, ladies and gentlemen? That all these other things we've been writing from up there are irrelevant. They are very much irrelevant. On reading this particular question that we have here, they are telling us November 2017, question number 5B, Day Limited has provided the following financial what year results. So I can see the years 2014 to 2017. I can see the profit after what year? Tax being given. And then I can see the earnings who? Earnings yield. I can see the earnings yield. And then they want me to give them the value of the firm based on the present value of expected who? Earnings. So if it is market value now, ladies and gentlemen, having written this, because they want me to give them market value, first of all, I'll come and remind them the formula of PO, which is DO into 1 plus G all over Kenya minus who? Minus government. So when we talk of market value using earnings yield, so now earnings instead of dividends, here now we are talking of earnings. We are talking of earnings at time zero. Earnings at time zero into 1 plus G all over, instead of cost of equity, now here we are talking of earnings who? Earnings yield minus G. Earnings yield minus who? Minus G. earnings yield minus G. Now, my great students, I don't know whether we are together. Are we communicating? Are we together really? Are we together? Are we together? Are we together? Are we together? Leo ni kama hamjakunywa kikombe ya kahawa. Leo hamuongei kama siku zingine. Na leo hamjakuja wengi. Leo hamjakuja wengi. Leo hamuongei sana. Okay. So assuming, ladies and gentlemen, that we are together, we are saying that the market value of a share or of a business, it will be equal to total earnings into 1 plus growth rate, because you can see our earnings are growing. Our earnings are growing. All of our earnings yield minus the growth rate. Now, ladies and gentlemen, could you kindly calculate the growth rate for me? Could you kindly calculate the growth rate for me? Kindly try. From the question given, could you kindly try to compute the growth rate for me? Just try, just try. Give us the growth rate, just try. So Cynthia gives me a figure of 1.64. How about the other students? Kindly try. Kindly try. Kindly try. It's November 2017, question number 5, boy. November 2017, question number 5, boy. I want to see whether there is anyone else who will be able to do like what Cynthia has done. Give us a figure. Just try to give us the growth rate. So please, I'm expecting to get an answer from someone else. Kindly talk to me. I am expecting to get an answer before continuing. Harrison says 1.64. So that 1.64 has to be correct. So Elizabeth has gone to calculate for each 1 year at a time. No, we don't do that, Elizabeth. Elizabeth, for growth rate, but thanks for trying. For growth rate, what we shall do is to come and calculate our growth rate this way. We'll talk over n minus 1 into, just like how we normally talk of what here, current dividends. So we'll talk over current earnings, all over oldest earnings, all over oldest earnings. And then of course I'll have that root there, minus 1 like that, minus 1. So if that is the case, ladies and gentlemen, please come and come and, ladies and gentlemen here, come straight away and give us our G. So please count those number of years. In that question of November 2017, come and count the number of years. So the number of years if you are to count, the number of years if you are to count, the number of years if you are to count, the number of years if you are to count in this question, if you are to count, you will see, ladies and gentlemen, so if you are to look at the number of years, so we have, ladies and gentlemen, from the year 2014 to 2017, we have 2014, 2015, 2016, 2017. We are talking of 4 years. So our growth rate will be 4 minus 1 root of the oldest, or rather the current profit after tax. The current earnings that we have there are 6.3. All over the oldest earnings, which are what here, somebody 6.0. Oldest earnings are 6.0, and then of course whatever we shall get there we shall come and subtract 1. So our growth rate here will be equal to 4 minus 1 is 3. 3 into this, so it will be cube root of 6.3 divided by what here, somebody? Cube root of 6.3. So we have here cube root, just get my calculator. So we have 6.3 divided by 6.0, which gives us 1.05 minus 1. So come and now give us that cube root. So cube root. So give us the cube root. So here, where are we? So we have here the cube root. So cube root from my calculator, I'll press here 3, cube root. So we have here, we have 1.05, or brackets here first, 1.05, cube root. Whatever I will get, I'll come and say minus 1. So minus 1, this gives me 0.0164 like that. So in terms of our percentage, this times 100, so this will give us 1.64 what here? Percent. 1.64%. So ladies and gentlemen, what I will do after I've gotten the growth rate, I want to imagine that everybody has been able to get this growth rate. Have we been able to get this growth rate? Cube root. Make sure that you know how to find the cube root. Make sure that you know how to find the cube root. Yes, thank you very much, Subo. Cube root. So now having gotten that, please come and plug in the figures here. Come and give us the market value. So then our market value will be equal to our current earnings, our most recent earnings. What we have called the current earnings, I can see the current earnings here are what here, somebody? 6.3 into 1 plus the growth rate, which is 0.0164. all over the earnings yield given in the question. The earnings yield given in the question. What is the earnings yield given in the question? The earnings yield given in the question is 12%, which is the same as 0.12 minus 0.0164. Could you kindly give us this answer there? Somebody give us that answer, which will be the market value, which will be the market value of that particular business. Could it be market value of a share or market value of a business? So according to Cynthia, we have 61.81. 61.81. Now, please notice here that instead of us using current dividends, here because you're using earnings yield method, then we can only talk of current what here? Current earnings. We can only talk of current earnings. So this question, the way I've done it, I've not seen you guys being so keen with it, and I don't think you have really understood it the way I would want you to understand it. So please allow me, after all, most of you came back, or rather came into our meeting room quite late. Allow me to repeat this question one more time. Is it okay if I was to repeat this question one more time? Or do you think you're comfortable? I repeat, I like that, repeat. Cynthia says, no, Samuel, please repeat. I'm waiting for 2 more. Repeat. Yeah, we repeat it. I'm able to sense that students have not been able to understand it very, very well. So what I'll do, I'll still go back to the background of earnings yield. And don't write this. This is just a background for guiding you. When we talk of earnings yield, how do we get earnings? For every share, it will be EPS all over MPS. Anything earnings yield, anything that has got yield must be having MPS at the denominator. But now you see here, they want total market value. They want us to give them total market value. And for us to get total market value, then our earnings yield formula changes slightly. So it's like you'll come and multiply this with the number of ordinary shares. Therefore, our earnings yield will be equal to total what here? Total earnings all over total market value. But now you see in this question, they want us to get market value of the company. So could you kindly make this market value of the company the subject of the formula? If you do that, it will be earnings yield times total market value times total market value equals total earnings. And therefore, our total market value will be equal to total earnings all over what here? Somebody earnings yield. But in a situation where we are a given growth rate, like in this question, we have our earnings, which are the same as our profits, increasing right away from the year 2014? Right away from this year, 2014 to 2017, I can see growth rate. So if there is a growth rate, then this growth rate will come and affect here. So this will be 1 plus G. Earnings yield minus what here, somebody? Minus G. Earnings yield 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 minus G. Now, and I try to explain. If you look at this particular equation very well, it basically comes from where? Because you'll not be required to derive it. This equation of valuing an organization or valuing a share comes from this mother of all valuation equations, which were discovered by Gordon, So our PO is supposed to be our DO as usual into 1 plus G all over Kenya minus who? All over Kenya minus government. All over Kenya minus government. This formula is it's PO, current market value of a share or market price of a share equals the current dividend into 1 plus G all over KE minus G. The same case, except that here, because we are using earnings yield. Earnings yield normally goes together with what here? Total earnings, which is the same as profit after what? Profit after tax. Now, the biggest challenge for very many students was to get, ladies and gentlemen, this value of G. Many were not able to get the value of G. many were not able to get the value of G. So, and we said, for us to get G, the growth rate, we'll talk of N minus 1 into, we have here our current earnings, all over all of our oldest earnings, and then of course at the end of the day, I'll have to subtract 1 there. Now, my great students, listen to me very well. We have our N from 2014, 2015, 2016, 2017, N is 4 years. So 4 minus 1, we are talking of third root or cube root. So we have here cube root of the current earnings given there. They are 6.3. All over the oldest earnings. Remember, earnings are the same as what here? Profits. The oldest earnings, ladies and gentlemen, what do we have? The oldest earnings, we have 6.0. So 6.3 divided by 6.0, and then whatever we shall get there will come and subtract 1. Now then, ladies and gentlemen, our work will be first of all to get this that is under the root. So you take 6.3 divided by 6. Whatever you get there, look for its cube root. And then at the end of the day, whatever you get, you subtract 1. So who is able to give us, ladies and gentlemen, this answer? So Collins, this is November 2017. Question number 5, boy. So somebody, please just take a step of faith and enter all these values in your calculator there, and then you give us the growth rate. I'm waiting. Somebody, I want to see whether there's anybody who will be able to give me the growth rate. So from Kaylin Dirango, we have 0.01 or 1.64. Thank you very much. I can see also AB Collins has just joined us and he has been able to give us our figures. Thank you very much, Samuel Tunje, 1.64%. So we have here, growth rate is 1.64%. So if that is the case, then come and plug in whatever figures that you have in this formula. So our market value, at the end of the day, our market value will be equal to what? Our market value will be equal to total earnings. Remember, the earnings here must be the most current, the most recent, even from this formula, the most recent earnings that we have here are 6.3 into 1 plus your growth rate, which you got there, which is 0.0164. All over, earnings yield has been given in the question. The mistake that many students do is to come and write just 12. They forget that it is 12%. So 12% is the same as 0.12 minus our growth rate, which is 0.0164, like that. So go ahead and give us the numerator, give us the denominator, and then you get the quotient. You should be able to advise us and advise as well. Give us the numerator, denominator, and then you advise. Okay, I'm waiting for someone to give me an answer. I'm waiting for someone to just give me an answer here for this final answer. Final answer, final answer. Final answer, final answer. According to AB, it's supposed to be 61.81. 61.81. 61.81. How about the others? How about the others? How about the others? Kaylin Dirango also gets the same. Kaylin Dirango also has the same. $61.82. Okay. Okay, okay, okay. Thank you. Now, there is a handout which has been sent in your group WhatsApp. Are you able to see that handout? There is a handout that has been sent there. Somebody has been able to send it. Somebody has been able to send some handout in your WhatsApp group. Mumepata kwa WhatsApp ama mjapata bado? Somebody. Mmepata kwa WhatsApp ama mjapata? Received. Catherine has received. Catherine has received. How about the others? How about the others? Tumepata. Asante Samuel. Tumepata tayari, received. Thank you very much. Thank you very much. So ladies and gentlemen, that is our first test. That is our first test. I've never given you any test to see whether you're following these things or not. I've only managed to do one question. I want you to do all the other questions in the next 1 hour. And then you send me directly your solutions to my WhatsApp group, which I'll be able to, my WhatsApp number line, which I'll be able to use, of course, and of course, give you feedback by tomorrow. So what I'm saying, I would want you to become very good in this valuation concept. So I have an exam for you. Which I would want to collect in the next 1 hour, because they are very short questions. straightforward questions. The next 1 hour, how I would expect you to do is to send your solution to this particular number within 1 hour. How do you do it? You just do it normally. You take a snapshot. Of course, you have to number your pages. You take a snapshot and then you send it to me directly after 1 hour, and then I'll be able to advise you what we shall be doing. And then if you allow us, this thing of having 2 sessions in a week, they are quite few through the management. I would want us to add another session, but if possible, we start a little bit earlier. I don't know whether we could have some sessions maybe running at from 6 p.m. What do you think? A session, an extra session, not, we can maintain our 2 usual, but now we introduce an extra session, a 3rd one, for now revising, like this exam that you will be doing. This exam will be doing. I normally go through all the exams I give, question, in this case here by question, revising, we revise live. So what do you think of this timing here, like tomorrow, 6 p.m. or a Friday, or whichever day that you choose to be our 3rd day? Because now we need to finish the syllabus and revise. So I want to introduce a 3rd day, So, okay, Suma is saying, okay, I agree. Which day? Please let us fix the day now. We fix the day now. So Judy says tomorrow 6 is okay. But Judy, I'm making an assumption that all of you will finish this exam within 1 hour, so that I can also have a look at it tonight. Most of them are saying Friday. Kwani is your members? I'm the members day. But I'm comfortable with Friday if you choose. If you choose it, if you go for it, I don't have a problem with it. But with the experience I have, you'll always get very many students missing the Friday, especially if it's Friday evening. But because you are the ones in this case here who have chosen it, I'm comfortable with it. So then I would expect you to get out from this system right away and start working on that paper. You finish it very fast, take snapshots, send it to me. I mark it live today, and then I'll be able to return feedback right away by tomorrow. Otherwise, thank you very much. I wish you all the best in that small exam. Finish it, send it tonight. All the best. I'm requesting that the communication should be done early in advance. True. We need to be giving you this communication early. Yeah. Yes, Catherine, I'll be able to finish. Yes, I will be able to finish. I've taught this paper severally for many years. I have so many shortcuts for this paper. You will love this paper. This will become your best paper in CPA. So long as you've try to master this concept of provincial officer, this is the best paper. So please, let us not waste any second from now moving on. I expect you guys to finish. For Friday, it's tricky. Can we do Sunday? No, I wanted Eddie. I wanted one of these weekdays. How about Thursday, 6, if your Friday is bad? Great, okay. All the best. I know today most of you joined a little bit late, but again, even what I had planned was to give you this exam direct. Thursday, I agree. iPad says Thursday, I agree. That is something that we can. Sunday, no. Harrison says Sunday, no. Even for me, Sunday, no. Thursday, we have a lesson. Thursday, we have a lesson, and it will be wrong for us to have 4 consecutive hours. No. We also don't want that. Apart from the 6 p.m. class, yes, we are retaining our 2 classes. I simply want to introduce a 3rd class to help you. I want to introduce a 3rd class to help you, ladies and gentlemen. And the 3rd class now will not be quite late at 7. The 3rd class will be 6 p.m. So it's like most of them are really settling for this Friday. Let's try Friday and see how it goes. Thank you, Joyce Getonga. When is the other class as per the timetable, plus now the one that will come on Friday? as per the timetable. The timings in the timetable remain. Those 2 sessions in the timetable remain. I'm not so sure of them. I can't even tell you when the next, but I'll follow my timetable always. I'll always follow my timetable. And then there is a Friday additional class for revising these kind of tests. Friday class will be for revising tests. We do more tests to revise. Give you like 2 questions on Thursday. You do them. We do them on Friday. Otherwise, thank you very much. Thank you very much. Thank you very much. So see you, of course, after you finish your cut. Where can we get the time? There is a timetable which you should be able to ask Helen. I think Helen is the administrator of Summit. Okay. Yes, Eddie is giving us a very good suggestion. Eddie is giving us a very good suggestion. I'll be giving you materials in advance, especially notes on theories. Then what you need to do is to identify your class rep. Let me work with your class rep. Once I have your contacts of the class rep, or even an aggressive class rep, you'll be able to get so many materials from me before our class times, well in advance. Well in advance. I like that approach where we give students like a handout, they go through. When we come here, basically we're looking at the most serious areas and then we move on like that. Where can one get a timetable from Helen? Just ask her for the timetable in your WhatsApp group. You'll be able to get that timetable very fast. Otherwise, thank you very much. I'm eating onto your exam time. Thank you.